Hello, everyone, and welcome to OAG's latest webinar, where we'll be talking about Australia. Joining me today is John Grant, OAG's Chief Analyst. Welcome back, John.
Hi, Deirdre. Good to be back. Summer's over. Leaves are falling in the United Kingdom, and Tony's looking forward to the summer. So it's not fair.
And there we are. Welcome, Tony. Tony Harrington is joining us. Tony's an aviation writer and communications specialist based in Australia, with extensive experience internationally and at home. So we're looking forward to talking about the market with you this morning, although, of course, it's your evening, Tony, isn't it?
Thanks, Deirdre and John. Yes, it is, and we are heading towards summer.
Lovely. Okay, I'm Deirdre Fulton, for those of you who don't know me. I'm a partner in Midas Aviation, and I've been hosting these webinars with OAG for quite some time now. We must take stock, actually, of the count of webinars. I think we might almost be into triple figures, but there's a challenge for the next one. Those of you who are regular listeners, welcome back. You'll know our format by now. We like to talk about what's happening globally in capacity terms, and then we'll get down into the detail of the subject matter. And that today, as we said, is Australia. There's a lot happening, and it's sometimes a turbulent market, as the last few months have certainly domestically have shown us. So we'll take a look at domestic carriers, capacity. How challenging is it for a new entrant to come into the domestic market? Certainly doesn't seem to be any shortage of supply of willing, I'm not sure what the best word is, candidates?
Idiots might be.
Optimistic people who want to lose some money. Let's see where we go. There's a lot of infrastructure coming, airport infrastructure in Australia. So we'll talk a bit about that and what implications that might have for growth. And then we can't, of course, possibly not quite the furthest away point on the globe from where we are today, but we can't not talk about international connectivity and how that's evolved and what we're seeing happening. So we'll take you through some insights there. And of course, we're happy to take questions. Please just drop them in the chat as we go, and we'll take them as they come. So back then to that sort of global picture. Our usual viewers will be familiar with this chart where we look at capacity by month for this year, last year, and 5 years ago, just to see how performance has trended over the last few months and what's ahead. We're seeing a fairly optimistic picture, aren't we, John, compared to last year and to 2019?
We are, and indeed, last night I was doing some comparison against September 2019, where certainly the pandemic's passed, and that's great news, and everyone's moving forward. But there are still some regions of the world where actual capacity is below September 2019. Which is maybe a bit of a surprise to some. Eastern Europe and Central Europe, given the political events there, is perhaps not a surprise. We would expect that. But in Tony's own backyard, the Southwest Pacific is still down about 6% compared to September 2019. And the worst and the weakest performing region versus that period 5 years ago is South Africa, where the demise of South African Airways resulted in lots of capacity being pulled out, and much of that has not come back, although that's made for a slightly less loss-making market than perhaps was the case previously. And it's also leading to every airline who's got spare capacity putting more into Cape Town this summer, their Southern Hemisphere summer, as conditions are good at the moment and demand is strong. So I think it's a mixed bag. I mean, the big markets, Western Europe, up about 2% versus 19. Northeast Asia is lagging a little bit, but there are some good points. And when I mentioned Eastern Europe and said they're down on previous 2019 levels, they're actually up nearly 15% versus last year. South America, and particularly the northern South American markets, are very strong, continue to grow and grow. So it's, as always, a mixed bag. Devil's in the detail, as we say. But I think, we're well set for the next couple of years, barring any unforeseen events. The price of oil recently has been falling. Expectations are that we're going to be oversupplied with oil going into 2025. That will be good. For some airlines, a slight weakening of the US dollar will help them in terms of their cost bases. So it's looking good, but it's not going to be as good as it was in 2023. That revenge spend, I think, has finally worn down, and we're back to normal trading cycles.
All sounds quite optimistic, John. I'm a bit worried that might just be it's a proverbial kiss of death, maybe.
It may be. It's also the latent effect of the summer holidays, so you yet to really get into the mode of cynicism. But things do look good. Load factors are high.
Yeah.
I mean, you and I were traveling quite extensively recently. Every flight we were on was pretty full, so
Yes.
it's looking good, I think.
Yeah. Okay. Well, that's a little bit of optimism so early in the morning. Okay. Let's dive into Australia then. So, what we've got here is just a bit of a snapshot of the market going back 10 years. So the slide here, we're showing capacity, and it's one-way capacity by year. Domestic market in yellow and international in grey. So you can see really the domestic market is flat and has really not grown in 10 years, which is quite interesting when you think about what we were saying in terms of the optimism of new entrants to the market. Interestingly, we also took a look at passenger volumes, and they follow a very similar profile. I think the growth rate is slightly higher, and slightly higher on international. But if you were to overlay passenger figures on this chart, it would look very similar. So there's a conversation to be had about domestic, and we'll come to that. Interestingly, as you were suggesting, John, international capacity is not yet back at pre-pandemic levels. It's nearly there, but still 3% below. And the reality, I think, is that that's probably largely the impact of China not being fully back up to where it was pre-pandemic. There was a huge amount of connectivity from regional cities in China, wasn't there, pre-pandemic?
There was something like 11 airlines Chinese airlines flying down to Australia at one point from numerous tier 2 cities. And I mean, from an external perspective, it certainly looked like there was too much capacity and quite low load factors. So, perhaps we're at what would be a more natural level of international capacity than what was an overinflated artificial level of supply from China. Tony, what was your reading at that moment in time in 2019? Was there enough market for all those Chinese carriers?
I think there was always thought to be too many, probably, John. There was something like 8 Chinese carriers going to Sydney alone. Excuse me. And at that point, even then, there was a lot of focus on China only. And very few people were seeing that if that bubble burst, the whole market would come down. And of course, that's what occurred, but they haven't come back in those numbers quite yet.
Yeah, same for nearly every other Southeast Asian country who's still hanging on, waiting for the Chinese traveller.
Yeah. Yeah. And this, of course, is a market, isn't it, where people fly a lot proportionally. So, certainly in the context of that domestic market, if you look at the propensity to fly, it's above two, meaning on average people are taking two flights a year. Obviously, we
Yeah.
know that's distributed. Not everybody is flying twice a year, but on average, that's what the numbers show. Looking at the biggest airports over that same time period, you can sort of see. Sorry, going ahead of myself there. You can see that Melbourne was leading in terms of capacity growth, certainly in the build up to the pandemic. Sydney not far behind, although for reasons we'll sort of talk about, it's very busy, and once airports fill up, then capacity constraints start to impact on growth. We're sort of seeing a similar trend, I guess, if we look at the 10-year period, so including COVID, but it's not, this is very consistent with what we're seeing at sort of national level, isn't it, in terms of the position for the biggest airports.
But if in this market particularly, you have those five very big markets, and a lot of the traffic is actually going between those five big markets. So there isn't a lot of interdependency on each other, and that explains why they're all broadly producing the same sort of levels of CAGR. But propensity to fly is, particularly high. It's a function of geographic distance. There isn't really alternate means of transport between the big cities in Australia. It's such a vast country. If you fly between Sydney and Melbourne at 8 o'clock on a Monday morning, you feel like you're joining a private club that's full of people who know each other and travel every week on that route. So it's got a very unique characteristic from that respect, and it doesn't surprise me that the CAGR hasn't really grown rapidly. We'll come on to some of the operational constraints, but it's an interesting market from that perspective for sure. I mean, Tony, you're a regular commuter in various points in Australia. I mean, you must know everyone else who gets on a flight, I would think.
It's like you said, John, it's a bit of a private club. You go into the lounge here in Brisbane or Sydney and Melbourne, and you'll see the same people at the same time on the same day each week.
Yeah,
it's actually quite a networking facility.
In fact, you don't want to travel. You don't want to travel. You just want to stay in the lounge, really.
Well, that was going to be my question, Tony. To what extent, because we've sort of seen different things in different markets, haven't we, in terms of the post-COVID people not getting back on the road quite as much as they were, versus what's happening now in Europe and the UK and indeed the US is employers are flexing a bit of muscle, trying to get people back in the office. Potentially 4 days a week, but there's a bit of arguing about that, I think. What's the position in Australia? Are people really back in the office and back traveling, or is there still that dynamic of actually we'll just do these meetings by Teams because it's easier?
There's a bit of a mix, Deirdre. I think just recently the government in New South Wales in Sydney, the state government decreed that all the state employees needed to be back in the office. And a lot of companies are starting to do that as well. But there's still a fair bit of work from home. The other thing was quite early in the recovery period, I know that Virgin had the position that the business market would recover in a way that, for instance, companies would not be sending their employees to an office in another city. If they had to go to close a deal, yes. If they had to go to meet their own colleagues, no. So there was a lot of intra-company business for a while was pulling back. At this stage, I think there's growth back there again. And as you say, it's flatlining again as to where it was.
And it certainly, it's been interesting, as John said, we've done a bit of travelling in the last few weeks. And the profile of people that we've seen have seemed to be more of a mix than maybe a year, 18 months ago, when, you know, aircraft cabins were filled with leisure travelers. So yeah, interesting. I think that shift, you know, in terms of people getting almost being mandated to get back to the office, we've not quite seen that fully play out yet, have we? So it's going to be interesting to see how that pans out. Okay, let's go on to our next slide, which is just to delve down a little bit more into the domestic market. So really, the domestic market has been dominated in Australia by two key players. It's Qantas and the Virgin Australia Group, isn't it? We've got Qantas in dark blue, and Jetstar, their low-cost subsidiary, and then Virgin and what was Tiger Air Australia, who became part of Virgin some time ago. That, you know, sort of collective 90% of capacity makes it really difficult.
It's a duopoly,
Yeah,
isn't it?
it makes it really. How does anyone break into that, you know, and carve out a successful niche for themselves that's big enough to actually to actually be sustainable?
If it wasn't for
I'm not quite sure if there's much growth there, because, as you say, it's a flat line on the graph. The reference to duopoly is interesting because while there's two carriers or two carrier groups, I think Virgin has been very, very clear in saying that you can't have a duopoly with 30%, 60%. And their view is that they've been unfairly painted. They see themselves as unfairly painted as duopolists, where the Qantas Jetstar combination is far bigger, whereas historically it's 50-50%. It's still two carrier groups, and to break into that, I think, as you say, has always been difficult because the market's it's trying to accommodate somebody trying to squeeze into something which is not getting any bigger.
I think, Tony, I think it's a classic example of Australia is such a vast country, as we keep saying. You know, typically there are some very long domestic sector lengths, in excess of 3-4 hours in some cases, and maybe even more. And that makes it, for anyone to break in to the market, you've got to be able to compete on frequency, and you've got to be able to compete on the key trunk routes. And that combination of frequency and those 5 trunk pairs you need to be operating on mean you've got to get to a really large size of fleet quickly to be able to take on and to create a sustainable business model. You know, and that, I think, is the challenge for all of the people who've been in the market in the past, is how do you ramp up quickly? And if you are going to ramp up quickly, then we come to that perennial problem in Australia of slots at key airports. You know, that people aren't going to give you those slots; they're not available. However hard you try at peak times, you can't get them. So it's very difficult for anyone to stay in the market for a long time and compete with these guys, isn't it?
Nobody's done that for any length of time. I think Rex were probably the longest standing, and they were an existing carrier. But if you go back to airlines like Compass or Ausair or Strategic, these guys have all come and gone over the past 20 years odd, and even more. And none of them have survived for very long because they've all had to try and push into that market. And as you mentioned, Sydney is the biggest hub in the country. Everything, all the major routes flow through there. And if you haven't got access to Sydney, then there's a big chunk of the market you're missing. But Sydney is very, very constrained. It's one of the most constrained airports in the world. I was laughing when I saw recently that, well, not laughing, but I thought it was a bit interesting that in Amsterdam, where there was an attempt to constrain the capacity and take away overnight flights, I looked at that and thought, well, that's been the case in Sydney for years, with 11 p.m. to 6 a.m. And then there's a movement, a cap of 80 movements an hour, and it's strictly adhered to, and it's measured on a 15-minute basis. So it's very, very hard to get anything more than the 80. And even with that 15-minute rolling hour, that makes it even harder. So to access it for a start's difficult, but then to maintain your slots is
And
another
if
level.
That new airport is very is long overdue, isn't it? I'm
The new
slightly
Sydney airport, when you say the new Sydney airport, it's been debated for more than 80 years.
Yeah.
But it's very interesting. In Western Sydney Airport, the demographic out there it's in excess of 2 million people, that catchment. Now that's bigger than Adelaide or Perth. So it's a very, very big catchment. And I think initially a lot of commentary was dismissing that as it's going to be a domestic airport and Sydney will continue to dominate. And that's right, Sydney, KSA, Kingsford Smith will continue to dominate. That will still be the premium airport. But Western Sydney won't just be domestic. I think there'll be quite a sizable international market out there. It will be curfew-free, which Sydney, Kingsford Smith is not and won't ever be. And Singapore Airlines has already declared that even 2 years ahead of this airport opening, at the end of 2026, they've already said, we're in. We'll be in there. They've been announced as the first non-Australian airline to come in and announce services. And they're not a small player. So they see the future of it. And there's a number of other carriers who I think are eyeing that or have the rights to do so. But it would be a big catchment area. There are large ethnic communities, there are large industrial areas. So for freight, for passenger services within and beyond Australia, and also being curfew-free, I think there's people will be surprised, I think, at the growth there. I certainly think it's going to grow very strongly. And there'll be great interest in it, particularly when foreign carriers start coming in. The local carriers will start taking notice.
And for the local carriers, that's going to be a challenge, because are they going to have to get more equipment to operate into the new airport? Are they going to give back some slots at Sydney so that they can begin services from the new airport? There's a whole host of questions that are about to be answered, aren't there, and change the dynamics. Maybe we will finally see a new entrant that is based at the new airport and, becomes almost a disruptive player like a Ryanair. Maybe Michael O'Leary's next venture is in Australia. I mean, I'm sure he'd go down a storm with some of his press conferences down there.
It'll be interesting to see what happens. I think that you mentioned capacity. For a lot of years, I think the carriers here have sat on the aircraft fleets that they've got. And Qantas, for instance, has got huge orders in now, but there was an expectation they might have been made a lot earlier than they were. But be that as it may, domestically, they're now starting to phase out the 737s. They've brought in the first A220s. The 717s are going. A321XLR will be in next year, and that will open up all sorts of possibilities. Virgin is moving into the MAX, the 737 MAX, and has just ordered 8 E190s, I think. The other thing as well is with the Qantas group, they've also, as well as having their own fleet, they have now contracted with Alliance Aviation in Brisbane to provide E190s, and they're providing something like 18 to 20 E190s on routes that were previously served by Qantas 737. So that's quite a smart move. They've built capacity without investing in it. And it's basically an outsourced airline. And Virgin also has agreements with Alliance. So Alliance, in a way, is a third carrier, but it's not operating in its own right on most routes. It's
quite
that almost exacerbates the problem for a carrier like Rex, doesn't it? Because we saw them make their foray into bigger aircraft, regional jets, narrow bodies, and that's, unfortunately they've gone into administration, haven't they, over the summer, and they're now back to just turboprop operations. And for a carrier that is operating a sort of peripheral regional network, and this is just the Rex current network here, the fleet that you have and your ability to operate in that market is critical, isn't it? Particularly when this is about not the high profile Melbourne Sydney, Brisbane routes. This is about facilitating connectivity for people that live in rural parts of to some extent, rural parts of the country. It's a big concern, isn't it? In terms of their fleet. We were talking yesterday, weren't we, that their SABs are averaging 30 years, which is not at the youthful end of the spectrum, is it, in terms of having a reliable, serviceable aircraft that aren't.
There's a number of issues in there too, I think, Deirdre. One is that on the rural routes, as you were speaking about, in some markets there is competition, but in many it's a single carrier. Rex has also, for many, many years, been that single carrier or the main competitor. And it's got a very strong record of serving those regional markets and serving them well. But regional markets, as in anywhere, will fluctuate. In this country, for instance, with drought, with economic change, that will influence particularly the regional markets. And Rex also operating the SARBs, they're going to come to an end of life at some stage, and they have the biggest fleet of SARB 340s in the world. How they replace those affordably, particularly in the situation they're in now, and how you maintain access to those regional markets, because there's nobody ready to step into those. There's no aircraft being built of that size at the moment, except down the track a little, perhaps electric or hydrogen aircraft, but they're not in production yet. And then you've got the question of infrastructure in regional markets. So there are a number of big issues that Rex needs to face, but also more broadly, the Australian regional markets. How are they served if Rex is degraded in any way?
Yeah, Tony, that's an interesting point, isn't it? This is, it's a specific Rex problem from a supply perspective, but from an economic perspective, has any of the governments or state governments got a handle on this and realise what's coming down the road? Because this is perhaps only 2-3 years away before some of these challenges are met. You talk about having the largest fleet of SARBs, but spare parts must become an increasing challenge, and at some point they'll end up cannibalising some of their aircraft to maintain others. And it's when you get to that stage, it's a pretty quick downward spiral.
I believe they've got over 50 aircraft in their fleet, John, but I don't think they're all flying at the moment. They've also got pilot issues, because like anywhere, there's a pilot shortage, and Rex is targeted by larger carriers. Mm-hmm. But as you say, in terms of fleet and also the ability to fund that, that's one thing. In terms of who would step in if Rex wasn't flying some of those routes, it's hard to tell, because there's no ready carrier ready to step up there at the moment. There may be some that will grow into parts of that network, but I can't see anybody who would grow into a network the size of the Rex coverage.
It's interesting, isn't it? Because there's a very definite acknowledgement of the importance of regional connectivity in the aviation white paper, that the Australian aviation white paper that was just published, I think a month ago, which sort of sets out the vision nationally for what 2050 will look like in Australia's aviation market. And they talk about, one of the focus areas for development is that air connectivity needs to be strengthened in regional Australia. The detail and whether, are we talking about subsidy? Are we talking about, what does that look like? Obviously, will unfold, but it's the eternal challenge, isn't it, to maintain connectivity to markets that don't commercially always make sense, and how you do that nationally is different examples of that in different parts of the world, aren't there?
That white paper statement is a classic cheap throwaway political statement for we must keep everyone connected, etc., etc. We know in markets like these, ultimately it comes down to PSO type services, doesn't it? Public service obligations. And then you get to these wonderful arguments from people in Sydney, Melbourne, Brisbane, and about, well, why am I subsidising or paying for a rural service to some point that I've got no interest in? And it's really difficult. It's such a vast country, but you wouldn't, if you were looking at regional aviation in Australia, you wouldn't start from the situation you're in now, because you are over dependent on one carrier. The major two big airlines have no real interest. They probably don't get much connectivity or feed from those markets themselves, and it's a burden on central government and state government. But it's got to be maintained in some way or other. And Tony, I don't think any type of VTOL or electric aircraft is a solution. Because of the infrastructure, and some of these places, are quite dusty and dirty, and the risk of contamination of vital parts of an aircraft, particularly in new technology, is going to be even higher, I think.
There's a number of issues in there, John. You've touched on most of them. The public service obligation routes, there are a number of those around Australia in the various states and territories. Where I am in Queensland, I'm in Brisbane, and where I'm in Queensland, the Rex has a very, very large circular network in Queensland, which only it serves, and that's entirely subsidised because there's no commercial, there's no viability at all in operating those, no commercial common sense at all to try and operate that. And they're not the first to try that, but they're in there at the moment. They're flying those in Western Australia, the same in parts of New South Wales. There's various subsidised routes. Airfares on those routes, I think in the white paper there was an assessment by the government that on average, a lot of those fares are up to 52% more than the same distance on intercapital. The fares are that much higher.
Yeah.
And there's stories of people driving enormous distances just to get lower fares from other ports. But as you say, future fleet, it comes back again to, even if it is available, it's not certificated yet. Even if those aircraft are available, Boeing and Airbus are having trouble building their aircraft now. Somebody new coming in and hitting the same supply chains, it's going to put a lot of pressure on. There's no aircraft delivered on time at the moment. And then there's the capital expense of delivering a new aircraft to an airline that's going to fly regional routes. And on top of that, there is, as you say, the infrastructure issue. So there's a lot of there are a lot of issues to be addressed, rather than just saying, yes, that's very important, we must do the right thing. I think it's going to come down a lot more now to finance, to infrastructure, to the right fleet, and also to developing regional communities. Some of these communities might not be able to support the cost involved in the infrastructure and new fleets. So how do you make the communities and the services resilient in what is going to be, I would have thought, a very high cost replacement exercise?
And I think the look at what we've seen with the Bonza experience. That was about lots of things we could say about it, and we were sad to see of their demise, but that they were about trying to tap into those regional, largely coastal markets, weren't they, to try and stimulate growth and serve some of that regional traffic. And it's almost sort of neatly illustrated right there just how difficult that is, and how challenging it is, and how the economics of it just don't work.
It's a very interesting example as well too, because they went into routes that were largely unserved. I think they're in over 80% of their routes there was nobody else competing on, but there's a reason for that.
Yeah.
If those routes, if those markets existed, if there was a viable ability to serve those routes, Qantas and Virgin, very smart, they would have been in there. They would have seen that. They're very astute companies, but also they were using brand new equipment, which is not inexpensive to lease. They were operating aircraft, which I think on many of those routes were too big, and they were operating infrequently. So it was largely a leisure market that they were tapping into, but also on routes where only they were flying, they were still discounting. Against whom, I don't know. So the model seemed to be a bit strangely sort of skewed towards big aircraft, too big for the routes, fares too low, and routes which may have connected, or the research showed a lot of the people travelling on those routes would have connected over Sydney or Brisbane or in some cases Melbourne previously. And that was knocking out that hub in the middle, or that middle point. But there's only a limited market that will do that for any length of time. For instance, Albury to the Sunshine Coast. I'm sure there's a market there, but not every day of the week. And they're flying it through.
And that, Tony, that plays to the, that earlier observation about propensity to fly of 2.2 in Australia. That leisure market probably has a propensity to fly of 0.5. So, that didn't help. I can't help but also think about, it was an investment by 777 Investment Partners, an equity company who've had airline stakes in other markets that have all failed as well, suggesting, one, they don't know what they're doing, but even more importantly, they're an investor in Everton Football Club, which it just finally reaffirms they certainly don't know what they're doing.
Impressed, John, that it's taken 36 minutes for us to get to football. But there we are. Moving swiftly on. So here's the question, Tony. Then on our slide deck, we had a little image there of a very cute-looking two koalas, actually. Koala Airlines. Where's the space for it in the market? Where's it going to go?
It's very hard to tell. It's very hard to tell. I see you've got Tiger Air and Bonza. And Bonza, in a way, probably wasn't even in the domestic market in a way. It was in a market all of its own. It was, I don't know how you would categorise their market, but Tiger obviously was absorbed. But over the years, you've also had Compass One, Compass Two. You've had Strategic, Oz Air. All of these guys have tried to crack into the market in various ways, and all of them falling out again. You had Impulse Airlines, which was a 717 operation, and also some regional, that was absorbed by Qantas. So I wouldn't call that a failure. I'd say that it was a strategic acquisition. And I think that founded part of the basis for Jetstar. Some of those first 717s, I believe, came out of Impulse and went into the Jetstar fleet. But in terms of new carriers now, and looking at the graphs you were showing before with the flatline market, I can't see where they would fit in under current conditions. But having said that, the government at the moment is saying, well, in future we maybe need to make Sydney a bit more accessible by looking at the way the slots are allocated in Sydney and making a greater proportion of those available to new entrant carriers. So that may ease it a little bit. A lot of these carriers have said we had no access or limited access to Sydney. That's one thing, but I still think, as you say, that in a competitive market, remember this is a deregulated market, so you can't really put too many blockers on the existing carriers. It will be a case of getting into markets that they're already being served, and trying to land a blow against bigger carriers with bigger resources who fly more frequently and are able to absorb any competition.
I mean, you'd have to give something like 20% of slots at the current Sydney airport to new entrants or a new entrant for it to have any impact on the existing operators. And of course, if they do anything like that, which would be brave and I'm sure challenged by the existing airlines, the fact is if you give 20% of slots available to new entrants, then they've got to be distributed across all of those new entrants that say, I want slots. And so suddenly you've got another fragmented group of carriers who don't have critical mass and will just wither on the vine over a period of time.
And you'll have Western Sydney playing into that as well. So
yeah, absolutely.
It'll be, I'm not sure how it's going to play out, as I say, with new entrant carriers. I think they'll keep coming up. They'll keep putting their hand up. And at the moment also, I think anybody putting their hand up at the moment, apart from either having not seen what's just occurred or having a bright future, I think that they could for a short time rely on the fact that the government will be looking sideways at other carriers saying these guys need to get a fair run at it. You can't. But again, then you're interfering in the market. And,
I know, and
it's a deregulated market. So
maybe there's a sweet spot for an opportunity.
There is a sweet spot. And I think that the market does need competition, but equally, I think that how you do that without limiting who's there,
it's
it's a very, very difficult question, because that suddenly is re-regulation.
Yeah, exactly.
Okay, coming back to the deck, we talked obviously about Western Sydney. It's just 2 years away from opening. And I'm not sure quite how visible the little graphic is here, but this really just shows you've obviously got existing airport over on this side. And as you said, it's the new airport really is serving its own distinct catchment, isn't it, in terms of space? But that's not the only infrastructure that's coming. We've got a new terminal planned for Brisbane ahead of the Olympics, which seem a long way away, but I'm sure they'll be coming around before we know it. And the third runway at Melbourne's just been approved as well in the last few days. So there's capacity coming, isn't there?
And Perth has also
certainly
announced a runway and terminal program, a $5 billion investment, Hobart as well. So there's a lot of capacity coming on for the airports. And as you say, Western Sydney, I mean, the runway lights are being tested. The terminal is built. It's due to open at the end of 2026. It's, for now, is well on track.
So, I mean, if it's opening at the end of 26, that seems still some way away. Is there any scope for it coming forward, or is that the definite start date? Because, I mean, SQ, as you said earlier, have already indicated they're going to be a launch customer. Others will have signed up between now and then.
You're probably giving palpitations, John, to if any of the team are listening into the webinar. the work that's involved in making a new airport live is challenging.
Yeah. I mean, and we certainly don't want another Berlin experience, do we? And there's a lot of prep work still to be done. But it seems that there is such a compelling case for this place to be up and running as soon as possible. Could they bring it forward a season? Is that possible at all?
I guess everything's possible, and at the moment they're making good progress, and they're certainly communicating a lot of milestones. As I said, the runway lighting is being tested, the aero bridges are on, the terminals up and running. There's a lot of interviews and political walkthroughs. It's still up in the air as to what needs to be done still. I think it's up in the air as to whether you could bring that forward, because while those are the visible signs, I think there'll still be a lot to be tested, a lot to be put in. And also the flight paths are still obviously being sort of finalised for there. So, and that's also got to integrate in with Sydney Kingsford Smith. So there's still a lot of administrative, a lot of planning work around that. I think the infrastructure is coming together, but then I think now around that will be the regulations, the rules, the
softer aspects.
Yeah, the other aspects, the softer aspects, and also, I mean, still it's hard to know who is going to put their hand up to fly there. Singapore has, the Australian carriers will all fly there, but I think there's still a lot to play out as to how many more carriers will go there, and I think that will become clearer closer to the date. But also, I mean, Singapore are planning 2 years out, so I would imagine that others might soon put their hand up as well. And the fact that they can see a future there means others might.
And it's obviously just road infrastructure, network, things like that need to be done, which all take time. But it just strikes me as we talk, there is so much need for this facility when you map it out.
Okay.
And it will be well used, and I don't think Sydney Kingsford Smith is going to lose out. I mean, Sydney is always going to be in high demand. Where it's located close into the city, they will still be full. I think it'll just be a matter of if anybody falls out, to make room for anybody else, because
it's about facilitating growth.
They will have a premium market.
It sounds like you're finally going to get a Gatwick to the Heathrow situation we have here in London. Heathrow's always in demand, but Gatwick's carved out a pretty strong niche for itself for local demand and, a growing cluster of long-haul flag carriers around the world.
And actually, if you see
Right.
some of the carriers that are going in there now as well, Singapore as well, it's just announced Gatwick. And other carriers are now looking into Gatwick more and more. So as you say, the spillover is occurring, and they're not low rent carriers. These are very, very good, high profile, high quality carriers. So
Yeah.
I think that's inevitable.
Well, here's some high quality carriers.
Yeah, nicely segueing into our next slide. We said we'd talk about international, and we were asked a question right up at the start about this. So we'll let John answer the phone.
No, it's gone.
Hang it up. That sounded like a very old school phone, John. Anyway, so what we wanted to just take a look at, obviously, we know that Turkish have got the rights to operate Sydney Kuala Lumpur. We also know that there's been an ongoing desire for Qatar to grow beyond their current allocation under the bilaterals for the Australian market. That's been blocked. So there's different things happening there. And obviously we had Qantas partnering with Emirates a long time ago now to change how people travel to Europe. So we thought we would just take a look at the networks for each of these carriers beyond, so from Australia up to their respective hubs, and then on to Europe, Africa and North America. And I think the charts sort of speak for themselves in terms of the potential that the Turkish connectivity over Istanbul offers the Australian traveller, and vice versa.
I think you need to look at the time, put this in the context of a timeline of events and reactions to fully understand what's going to happen, and maybe it wasn't what they wanted to happen. So you had Emirates and Qantas with quite a nice, cosy relationship. One time, I think Qantas actually abandoned their Singapore hub and moved it up to Dubai to have an even closer relationship with Emirates. Qantas obviously part of the One World Alliance. Interest always growing from the Middle East carriers in Australia. It's a natural sixth freedom flow from the whole of Europe down into Australia. Big kangaroo markets and all of those sort of historic flows. So along come Qatar Airways, rapidly growing airline, good product, part of the One World Alliance. And they ask for more capacity and it gets rebuffed. Qantas saying it's not necessary, it's not required. Qatar Airways, also a member of the One World Alliance, being essentially blocked by another one of their alliance members. And then you end up with Qatar Airways in the last couple of weeks reportedly interested in taking a 20% equity share into Virgin Australia. Qatar have, despite this One World Alliance, a number of code shares in place with Virgin Australia because they need domestic feed, and they clearly have got a better commercial arrangement with a non-One World partner than they do with a One World partner, a local One World partner. And such is the depth of the Emirates-Qantas relationship that they clearly see Emirates as a preferred partner to work with a One World member, which is slightly strange. Happens in other parts of the world as well, but we've been told about seamless alliances, common shared values, products, pricing, connectivity, and they go off in their different directions. So it seems like Qantas wanted their cake and they wanted to eat it and block others from coming in. And one of the arguments, of course, is that Qatar, there isn't very much of a local market to Doha. I don't know if you've ever been on a plane that arrives in Doha, but no one gets off and goes to the baggage reclaim belt. They all go to the transfer desk. So the Aussies could reject it on the basis, well, there's no local market need that we need to serve. So along come Turkish, and Tony, there's a very big Turkish community in Australia, and they, particularly in Melbourne, and suddenly they can't stop them coming in because all of the arguments they made to block Qatar don't apply to Turkish Airlines. So suddenly they've got a lot more competition than they probably anticipated.
It's very interesting looking at those three network maps. I think just historically, I was just scribbling down there before. If you look at the flow there between Europe and flowing east, between Europe and Australia over the Gulf, initially, I mean, years before the Gulf carriers were there was KLM, Air France, Olympic, JAT as it was then, Alitalia, Virgin Atlantic later on. A number of these carriers all flying into Australia are now gone. Then there was the big shift towards flying over the Asian hubs. Malaysia has dropped off. Thai has dropped off. Singapore is very, very strong still and continuing to be. The Gulf carriers have grown, but now it's almost like a fourth iteration, if you like. If Turkish reaches its full potential and picks up the rights it's got, and I think at the moment they've got 35 a week up till the end of next year that they can operate. Now, Qatar is capped at 28. Emirates is well up over that. But if Turkish starts to grow into other cities or even through codeshare with other Star Alliance partners and starts to tap into that, there's enormous potential for a shift of market, I think. Etihad has dropped right off. They had their own issues. They've come back down. They're now rebuilding. And it could take 4 or 5 years for them to get back to where they were. Emirates is strong. There's a very big airport planned in Dubai, obviously, which is 4 or 5 times what the current hub is, which is already the biggest. And Qatar obviously is growing, but Turkish has got a big hub already, and they continue to expand. They've got, I think we were saying yesterday, the only 3 parallel runway operation in Europe. So they're very, very big, and they've got more connectivity over and through Europe than any other carrier. So the propensity for them to grow is great. The opportunity, given the market that they serve, is pretty good. What happens, I don't know. It depends on what their plans are now. They'll probably shape what happens in the next short while, I think, depending on how much they tip into that market. And that will, I think, depend as well on the availability of new long-haul aircraft, 350-1000, which will do Australia to Turkey non-stop. And the same with Qantas with Project Sunrise.
But the interesting thing is, it's not, and I remember having some meetings with Copa, the Central American airline, and they said to me, we were talking about business development. They were really not interested in serving the tier 1 airports from a connectivity perspective. They wanted to serve the secondary airports where there was no competition, where they had a free run at it. And if you look at that Turkish Airlines network, it's fortuitous and it's ironic that we're showing the TK network in red, because they cover all of the secondary markets in Europe with at least daily, if not twice daily, and sometimes even three times daily services. So, the Glasgows, the Edinburghs, the Dublins, all of these points, and many points in Germany and in France and in Italy, are suddenly going to have one-stop connectivity all the way through to Australia, and that's going to impact every carrier who's in the market. And Turkish have got a free run at this, and maybe, just maybe, a little, this is a result of previous protectionist type attitudes and stances that have been taken.
They've got a very good product as well. I think that's going to work in their favour, obviously. But if you look, as you say, if you look at that route network and you look at the connectivity that's offered, and you look at the fact that they'll price their way in, they were approved last year. They're now about to enter Sydney from December. That'll be over KL. They're already in Melbourne over Singapore. And in fact, their arrival on Singapore-Melbourne has coincided with Emirates' departure from Singapore-Melbourne.
Oh, now there's a coincidence. Is that a coincidence, or is that something more?
Who knows? But it's obviously, if the market could support them both, they'd still be there, I would imagine. But that's an interesting small observation, I think. The fact, are they connected? Hard to know, but you can always sit back and say, well, that looks like a natural consequence.
Yeah.
And the other thing is that Turkish, as a member of Star Alliance, has also got other ways to tap into markets here through carriers like Singapore Airlines and others who are, well, actually Singapore will be the big one, into here until they establish themselves in non-stop routes. And I imagine Sydney and Melbourne would certainly be the non-stops. Whether they do that with other markets is yet to be seen. But there's that potential. And of course, at the moment, Virgin, while it's not a member of Star Alliance, if you look at the partnerships within there, there's a large number of star carriers in there. So it's not a great stretch to imagine that Turkish might at some stage also partner up with Virgin.
And you end up in a strange situation, because you have this duopoly, where for every other airline who is not a One World member, Virgin Australia becomes the default interline partner. It's anyone but QF, isn't it, for nearly 90% of the international carriers who are operating into the country.
Think British Midland.
Well, yeah, except they've gone out of business, so we don't want that to happen. But it is
you don't want that to happen. But I think if you look back over those years,
parallel, isn't it?
Yeah, it's an interesting parallel.
Over the years, I don't think they carried in their own passengers. I think they carried everybody else's.
If you're Virgin Australia, what incremental benefit are you going to get from having to pay to join the Star Alliance and undertake all of the necessary qualifying criteria and administrative burdens and all of the things that would bring for you, when you're basically sitting there saying, come on, yeah, happy to work with you anyway?
I agree. I don't think there's any need for Virgin to join an alliance. Everybody's coming to Virgin, and they're largely star carriers with the exception of Qatar. And Qatar is, as you say, there's a lot of talk at the moment that they will take 20%. Some of the speculation was it would have already happened some weeks ago. It still hasn't. But I mean, the other question there, of course, is if Qatar is capped in terms of additional capacity, that certainly locks Virgin in as a partner with them. But it doesn't guarantee them any more capacity, no matter how much feed they get. So there's an interesting sort of a dynamic there. Why would you do that unless it was to lock that partner in?
Yeah, I guess it's ultimately down to who's driving that, whose agenda is behind that, and it's part of the Qatar story, isn't it? In terms of if you look at what they're doing in different markets globally. They have
20% of IAG. They've got a share in LATAM. Between 2015 and 2017, that they were acquiring shares in all the One World airlines that they possibly could. They got a share in Cathay Pacific. They've got a bit in China Southern, and for some reason, they're going to get 25% in Airlink, a South African local carrier. So they're not afraid to invest in airlines either for strategic or just commercial reasons. So it's no great surprise that they're going to do this.
No, I think that the interesting thing for me is that given that the government here has blocked them from any more capacity, it would seem to me that this would also have to be approved by the same government, an investment in a local carrier. Now, there's no restriction on foreign investment in domestic carriers here. So from that perspective, there should be no impediment. But it would be interesting to see now what the government's perspective would be if it's Qatar, who they've already capped for reasons of national interest which have never been explained.
And therefore this may just be a rebut back from Qatar saying, well, might not let us do this, but you can't stop us doing this one.
The unintended consequences.
Virgin wants the money.
Yeah, really interesting. Well, we're almost at a close. I feel like we could carry on talking and investigating what is a fascinating market. Sure, there are challenges, but it certainly feels like there is opportunity. With carrier interest, and with airport infrastructure, coming on stream. I think there's much to be optimistic about on that front. So Tony, thank you so much for joining us today, and thanks for your fascinating insights. It's been a pleasure having you with us. And John, thanks for limiting the football references only to Everton.
I'm not sure that's a football reference. I think that's a disaster reference.
Okay, for all of you listening, thanks for joining us, and we will be sending you a copy of the slides and the recording later today, and we'll be back some point in October, I think provisionally the 23rd of October, but we'll be in touch through the usual channels to do that. Thanks everybody, and have a great day.
Thank you.
Thanks, John. Thanks, Deirdre.
Thanks, Tony.